It's a great quarter. You took over almost 2 years ago at the start of 2025, and there were a lot of questions as to exactly how you get this company back onto a path of organic revenue growth. 4 straight quarters of organic growth with regards to net sales, more than 6% in the most recent quarter, and your guidance for the next fiscal year, the full fiscal year, is 3 to 5%. Do you have confidence that you're going to meet that?
Yeah, absolutely. And I think, like you said, when we announced our new strategy called Beauty Reimagined 18 months ago, we made a set of promises. And today, I'm happy to report that promise made, promise kept. We are reigniting growth, accelerating our innovation, significantly expanding margin, and really investing also in consumer acquisition and behind our brand. So we are, as you said, having great momentum into fiscal 26. We have had 4 consecutive quarters of growth. The strongest quarter was the last one at over 5% growth. So that gives us good momentum. We have the playbook, we have the right brand, we have obviously the right team, and we are ready to accelerate in fiscal 27.
There are some concerns, despite the big move that we saw in the share price today, still some concerns about investors about some momentum going forward. And when I look at the guidance for the full year, that 3 to 5%, I mean, if you hit the low end of that range, that's not really an acceleration in growth. I'm sure you're aware of that.
Absolutely.
Here. The question you always have to ask CEOs, are you sort of lowballing this so that you can kind of manage expectations and beat that?
So look, in fiscal 26, we had guided 0 to 3, and we hit the top end of the guidance. So our objective, as we see the beauty market, and especially the prestige beauty market, accelerating around the world, we want to just take the opportunity of the market accelerating and us accelerating. We have a slate of new innovation coming to market. My ambition with the team is always to work minimum to deliver the middle of the guidance, if not more, obviously, if we can. And we're putting our brand ready in the right channel where the consumers are to obviously accelerate in fiscal 27.
Well, let's talk about those channels. You've done partnerships with TikTok and Amazon, a bit of a departure for Estée Lauder in the past. You've cut a lot of jobs, primarily in that sort of, one-on-one distribution side of it. Is this the future of Estée Lauder distribution?
So I think it's just we are adapting our distribution, obviously, as the consumers are also evolving, and our job is also to meet the consumers where they are, that is in China, in the US, in Europe, wherever they are around the world. So our idea was just to rebalance, and that's the first pillar of Beauty Reimagined, is to accelerate the distribution expansion where the growth is and where the consumers are. But we always do it by protecting quality and experience that we are bringing with our consumers. So today we are feeling that we are in a good place where, from social commerce to specialty multi to our own direct to consumers, and obviously the department stores, we have actually the right distribution channel that allows us to capture both on the recruitment front, but also on the retention front, all the consumers throughout the spectrum.
Well, with regards to some of those partnerships, I am curious, do you get the same margin, or are you sort of having to sacrifice a little bit of margin in some of those partnerships as opposed to the normal retail?
Well, I think what we are always looking at, we want not only the distribution to be margin accretive for us, but also to be equity driven for our brand. The decision that we always took is, first and foremost, are we going to build desirability and equity with the brand that we have today? And today, what we've done, you mentioned Amazon, TikTok Shop, we have Douyin in China, and many other brands. Every single time we are working with our partners to continue to develop the experience and enhance the equity and the desirability of our brand. And I follow very closely with my team. The desirability ranking is one thing, market share is another thing, but brand desirability, brand equity is always the first KPI we look. So whatever move we do, from a distribution to new innovation to campaign, the key indicators is always to create more brand love with the consumer to keep them for a long time.
Let's talk about the skincare business. The previous quarter, Q3, fiscal Q3, that was flat. Yes. That rebounded nicely in Q4. What changed?
Innovation, the innovation pipeline, and I mentioned it in quarter 3. We had a softer innovation pipeline in Q3, and we ramped it up, and we finished in a very strong high note at plus 4% in skincare for quarter 4. And I mentioned it this morning, during the call. recall, we have a slate of new innovations, starting with Estée Lauder, with Clinique The Ordinary, that have been going from strength to strength, around the world. And the good news is that we have innovation at various price points. At the entry price point with The Ordinary, with Estée Lauder in the middle of prestige, and obviously La Mer that is going after the luxury consumer. So sometimes you may have some adjustment, and that's why I always look at the full 12 months of innovation, and we've guided next year a 200 to 250 basis point improvement on innovation led by skincare. So you may always have some quarter that are softer than others, but when you look at it on a 12 months rolling, we feel very good about the innovation pipeline coming in the next fiscal year.
How much of that innovation pipeline might actually apply to the hair care business, which was down in the most recent quarter? I was kind of surprised by that. Is that just some sort of cyclical trend or something secular or something you're doing?
No, I think for hair care, we had to reposition our brand in the right channel. And we see today, especially for a brand like Aveda, we're seeing great momentum in North America, being the largest geography for Aveda, where we're seeing with the move that we've done with Amazon, with TikTok Shop, but also repositioning the brand in the salon network, in the track data salon network, we're seeing improvement in our performance. But to answer your question more directly, innovation is also on hair care. We have innovation on skincare, on makeup, on fragrances, and hair care. Part of the beauty reimagined strategy is the diversification of our growth. Diversification doesn't come only from channel. It also comes from category for brands, but also from the type of innovation that we're bringing to market. So you're going to see also more coming in hair care going forward.
Your fragrance business, no surprise, was the strongest, at least on a growth basis. Should we think of Estée Lauder more as a fragrance company going forward, or is your goal to have everything kind of balanced out between skin, hair care, et cetera?
Again, diversification of growth. I think in this moment in time, fragrances is one of the categories that is the fastest growing in beauty. We happen to have a very strong portfolio of luxury brands from Tom Ford to Jo Malone, Le Labo, Kilian, that are within our fastest growing brand in the company. Now what we're doing in fiscal 27 is not only accelerating what we've done with luxury fragrances, but also entering in a much more meaningful way in prestige fragrances, which is the bulk of the market. We've started in fiscal 26 with Balmain Beauty, that has been off to a very strong start in markets like the US, the UK, and continental Europe. And now, for the first time in over a decade, we have a really strong launch with the Estée Lauder brand called Glimmer is actually in store. And also Kilian is launching a new prestige line. So it allows us to really continue the strong momentum that we have had in fiscal 26 into 27. And we have had one of the best performing in the market and hoping to...
I wanted to ask you about Glimmer. That's Haley Steinfeld's brand. I mean, so is the strategy to kind of build things up within kind of the Estée Lauder system, or to buy? And I asked that in the context, too, because there was a lot of talk about the potential tie-up with Puig, which went under for a wide variety of reasons. Were you in favor of that deal?
Yeah, but I was basically supporting it. Look, our philosophy on M&A is very simple. First of all, we always look at our organic growth internally, and that's why we are accelerating the diversification that we're having within our own brand. But when we look at M&A, we look at three things. First, is it a good brand? Is there something in front of us that is going to be complementary to the portfolio? Think about our portfolio of fragrances, from Jo Malone to Tom Ford to Le Labo, Kilian, Frédéric Malle. They're all very different. They tailor to different consumers. They have different distribution, different price point, different business model. So we make sure it's complementary. The second thing, is it going to allow us to diversify growth somewhere from a geography, from a channel? But more importantly, at the end of the day, is it at the right price point? Yeah. And that's always the right thing that we're doing to see, is it going to...
So you walked away from that because of price?
Correct.
It was price, okay. I am curious, though, the CFO said on the conference call today, talked about deleveraging, talked about CapEx, dividend, no buyback mentioned, but I was also curious about M&A, and there was no explicit talk of that, but I am curious if you do plan to pursue other M&A deals, assuming the price is right, as you say?
Yeah, we will always be part of the M&A conversation. I've been very clear.
Large ones, or are these just kind of...
Look, at the end of it, it means to be complementary, but I think one that we've announced recently is for us essential, the leading prestige brand in India. And for us, I've been very clear that I want to accelerate the penetration of emerging market. We see a great potential. And after the wave of K-beauty that we're seeing around the world, we see Indian beauty getting a great potential. So for us, essential is the next acquisition. We are waiting for regulatory approval to launch the brand within our portfolio. But that's the type of acquisition that we are looking at.
Well, let's talk about some of the share that you're making in Asia, Japan, Korea. China business had 6 straight quarters now, I think, of share gains there. You're relatively well diversified geographically. And I am curious, though, do you see more opportunity from Asia to expand the business where it becomes a larger share of total sales?
Yeah, I think what I'm very excited is actually to see the recovery of China. China as a market is very strong, and we're seeing accelerated in the high single digit. And the good news, like you said, 6 quarters in a row, we've been able to gain market share. So in a very dynamic market, we're seeing acceleration. We're seeing also market share gain in Japan. Korea is actually, as a market, is really also coming back after a few years of softness. Not only the market is stronger, but we're also strong. So we are seeing great potential. In Asia, they love beauty, and we are always part of it.
But kind of square that. But you've talked about this idea that China has kind of moved away from just being a growth market to a more mature market. How do you fit in? I know you have a big R&D center there in Shanghai. The idea of creating things for the Chinese within China. Absolutely. That's the strategy.
Absolutely. Yeah. Today, we have 30% of our innovation globally that is coming from our R&D center in China. And the strategy originally was always to create an R&D center that was creating innovation in China for China. Because the Chinese consumers have different habits. They have different regimen. Their skin regimen is very different. So we're developing a lot more product that is allowing us to be not only more locally relevant, but also to be more into culture in China. And this product are really helping us to support the growth that we're seeing in China and frankly across Asia.
A couple more questions here. Travel retail. I mean, a few years ago, this almost basically destroyed Estée Lauder. And it's come back based on the most recent quarters. Is that going to be a sustainable sort of pocket of growth for you?
Yeah, I see travel retail. Today we are at the right level. I've said it very clearly. We have about 15% of our business that is coming from travel retail, which is a much lower percentage of the business than we used to be, which allows us also to just navigate volatility in a much better way. But today, travel retail is still a window to the world when it comes to discovering our brands, and we're seeing a lot of great potential. Hainan, we're growing double digit, but we're seeing Korea, Hong Kong, Thailand also growing. Obviously, Europe has been slightly disrupted in this fiscal year because of the conflict in the Middle East. But we're even seeing for us America doing very well. So I see travel retail as a growth potential for us, but more in line with industry standards, which is about 15% of our business going forward.
Well, speaking of the Middle East, I mean, can you quantify how much the conflict over there is costing you business?
Yeah, for us, when you put the Middle East, Israel, and travel retail, it's about less than 2% of our business. So it has been very manageable for us to navigate it. It's also one of the reasons this morning where we called out that while we're going to have stronger growth in the first half versus the second half due to the innovation pipeline, it's not correct also in our emerging market because we expect a rebound in the Middle East that will allow us to just have a stronger second half.
I do have to ask you, you're a Frenchman running probably the biggest, if not the most well-known U.S. grown beauty products company out there. What does that say about why you're there and what Estée Lauder is looking for?
Maybe it's just a little bit of a clin d'oeil. I was born in the U.S. despite my French accent, so I have the dual citizenship. But I feel very humble and very proud. On the 80th anniversary of the Estée Lauder company, to manage what I believe is one of the most beautiful portfolio of brand in the world, and certainly an amazing team that is delivering outstanding results in 26. And I have no doubt that we will continue in 27 and beyond.
And part of that history, you're going to keep up the relationship with Saks. You go back to the early days, and
always. This is part of what we do. History is very important, and we are working with our historical partner to continue to reinvent experience in the store. At the end of the day, Estée was the first one who created this notion of eye touch in the US and creating beauty as we know it in so many ways. And we'll continue to do it, but we'll use new channels, new media to be able to just connect with consumers and delight them wherever they are.
And just to be clear, your relationship with the sort of new Saks, which is out of bankruptcy now, it's good. You're providing product to them.
Absolutely. We have resumed shipping, and we're very happy with the partnership that we have with Saks.